On Small Cap Power, we welcome Michael Waring, founder of Galileo Investment Management. Michael, thank you for being here today.
Thank you.
So talk to us about founding Galileo Investment Management and how long it has taken you to be where you are now.
We founded the company back in May of 2000. The reason we started the company was really to focus on small and mid-cap growth companies. And for that reason, we can't really get too big. We're focused on these smaller companies, and we want to limit the size of the firm. So that's why we stepped out and created Galileo. We launched two mutual funds in November of 2006, and we've grown them along the way. And one is focused on growth companies, and the other one is focused more on income and a bit of growth added to it. I'm managing Galileo High Income Fund. Mm-hmm. It's designed to provide some growth, but also have a component of yield. So it's currently yielding about 4.5%. It's paid 4.5% annually, that is paid out monthly.
Mm-hmm. All right, so let's go jump into the oil and natural gas sector. Is it a good time to be invested in it right now?
I think it is. I will tell you right now, I'm not super constructive on the outlook for the price. I think $55 to $60 is probably a fair expectation of what we can see over the next 6 to 12 months. But having said that, the prices of the shares reflect something a whole lot less. In other words, there's not very much investor enthusiasm at the moment for oil and gas, and so I think there's an opportunity for those investors who are patient.
You just mentioned that the investors who are patient will do well. How about those who are uncertain? How do you tell them to at least calm themselves when they're emotional about these investments?
Well, the problem is that these markets are driven week by week, and they can go up. The energy market is a global market. It can go up and down, and people have to be able to ride through the storm and not get caught up in any one week or any one set of numbers, inventory numbers that come out weekly, because that's too short term.
Mm-hmm. And is Canada, as the 5th largest natural gas producer, do we have enough in our reserves to meet the demands?
We've got plenty of natural gas. That's not a problem. I actually am constructive, probably more constructive on natural gas than I am on oil at the moment, simply because there are new pipelines that run from Texas into Mexico. The United States is exporting a lot of natural gas into Mexico. There's also an LNG plant that has opened up, and they are exporting natural gas in the form of liquefied natural gas from the United States. And thirdly, natural gas is replacing coal as the fuel of choice to generate electricity in the United States. So I actually am very constructive on natural gas. It's been unloved for 3 or 4 years now, at least.
Right. Yeah, geopolitically, Canada, the US, what's going to happen to the sector, both oil and natural gas?
It's very difficult to know. There is an excess of oil inventories in the United States and globally at the moment. OPEC made an announcement back in November to reduce production for 6 months to the end of June. They're having another meeting in May, and I think they will announce another 6-month extension to that cutback because they really need to get these inventories worked down.
Right. And do you have any stock picks for oil and natural gas at the time?
We have two. One's a little smaller. It's called Delphi Oil and Gas. It's about a $240 million market cap. We're attracted, I should back up and tell you, we're attracted at the moment to natural gas producers that have a lot of natural gas liquids associated with that natural gas production. Natural gas liquids, or NGLs, actually sell at a higher price than the price of oil. So if you drill one of these natural gas wells that has a lot of NGLs produced with it, the economics are extremely attractive.
Right, right.
Even so, that's why even you don't have to have prices to go higher. These companies that, if you can find ones like Delphi, they're generating internal rates of return of 70 to 100% at current prices. Another one, a little larger, is called Paramount. The market cap is $1.9 billion, but they have no debt, and they have cash and investments. So if you strip the cash and investments out, the net market cap is $1.1 billion. Right. And what's intriguing here is the growth rate. They're currently producing about 16,000 barrels a day. It's about 50% natural gas liquids. We think they can exit this year at 30 to 35,000 barrels a day. So in other words, a doubling in production over the next 6 months.
Significant growth projected.
Very significant.
Right. So let's move on to real estate investment trusts. For investors who don't know, what should we look for when buying REITs?
Well, we come at this a little bit differently. We're trying to find unique situations. And two of the REITs that I'm going to mention today are actually, they're listed in Toronto, but they're 100% US asset based.
Right.
So they diversify our portfolio, they get us into the US, and we stay away from overheated real estate market in Toronto or Vancouver.
Okay. So where are they based? What's about them?
So one of them is Pure Multifamily. They are based in Texas and Arizona. They focus on garden-style apartments. So don't think big, tall apartment blocks. These are really luxurious, beautiful,
Right.
low-rise apartments. They have a history of upgrading from grade B to grade A. They can sell grade B buildings and get tax deferred on the proceeds, and then take that money and buy and invest in grade A. So they're constantly upgrading the portfolio. We think this is a good long-term bet. The second one I want to mention, it's not very often in this business you find a stock that's just a little jewel. You want to take delivery of their certificate and put it in your safety deposit box and
Right.
just keep it. And that's WPT Industrial Real Estate Trust. This company is focused on warehousing, and they have very modern warehousing facilities that have, it's important that they have 31-foot ceilings in these buildings. All of the buildings have to be a certain minimum size.
Right.
They currently have about 1 billion square feet of warehousing all over the US, and they manage the whole thing with only 20 people. And I recently met with management, and they told me they could double or triple the square footage that they have without adding any people to the staff.
Wow. And how do you do that?
Industrial REITs are very, very efficient because it's working around forklifts, automated forklifts, and very few personnel actually in the warehouse.
All right. Well, Michael, thank you so much for your time today.
Thank you.
To learn more from other experts on Small Cap Power, make sure you watch our other videos. I'm Rachel Lee for Small Cap Power.